How's it going? Welcome back. It is Jonathan. Okay. Well, not sure if you've seen the market, but we're at a bit of a juncture right now. Now, those of you who are currently enrolled in the 2026 time by solar degrees cohort, okay, so of course for that one, which we're running at the moment, I want you to keep track of your dates. Okay, I'm not going to go over them too much in detail. I want you to keep studying those, but you will notice that we are right at a juncture right now. So we're going to take a look at the US markets quickly. Now, I'm going to be doing no real forecast today, okay, but just mostly an update on where we're currently at right now and what's coming very soon, because we want to know, is this market going to be turning or not? So you'll be familiar with what we've already taken a look at the other day. We have this whole period here where we're watching if the market's going to reverse. The other time that I spoke to the market, let me go ahead and close this one off. So this is a little lock panel over here. The market had just come down here and reversed up. Okay. And I think this was the bar right here that we were looking at. Okay. Well, the market did reverse. Okay. So Trump came out, I think, very next day, or very time period that this came out. The Trump administration came out talking about oil, talking about all this sort of stuff and how they got more barrels to release, etc. Strait of Hormuz is open. And well, the market hasn't really favored that and it's come down. We're back down at the 180-degree level. And that's really what I'm worried about right now, because if we crack this level here, then that's going to open up levels below it. And if we actually go back and take a look at what's happened in the past, okay, we can see that the next major level is going to be right down here at this 360-degree level. Because if we take this to the left-hand side here, we can see that we've come up with a prior resistance level here and a prior resistance level here. And we haven't really come back down and touched it. So that's what I'm worried about. If we do break it, our monthly forecast will be inverting the second half of the month. Not ideal. I'm going to show you just quickly the period that we're in right now. Okay, you can see that the market came down into this point, reversed higher. And then we're actually in this period right now where we are expecting a pullback, okay, a pullback in price or a fall in the price. However, what I'm worried about is if this market actually falls below here. Okay, so from a time perspective, I'm definitely expecting a change of trend, especially since the market's topped out on the 10th. I would be expecting a change of trend to occur Thursday, Friday period. That is definitely what I would be expecting. Whether it happens or not, we got to keep that in mind, that anything is possible. And a close below that wouldn't put us out into a change of trend until next Monday. Okay, so that gives us the weekend to be worrying about. But it's still in this zone. Like I said, the only issue that I have is if we really crack this, we could really be targeting this 360-degree zone. That's not ideal. It really goes against the grain of the trend, but that is definitely on the cards. Regarding the other markets, we'll take a quick look at these ones here. So let's go ahead. Now, the 90-degree angle, which we're watching, has been broken and it's actually closed below. So we did get above the 180. We got back into this zone here, rejected. 180 provided no support at all to downward move. 90 degrees is currently provided no support, but we are on a potential turn date. So I'm not going to let it go just yet. We could get a swing higher, but it really does open up this 6561 zone, which is 315, especially if we crack this low that occurred on the 9th of March. We could be heading lower. Just keep in mind from the McWhorter perspective, especially those who have got that, the bullish trend from McWhorter's perspective is over. Okay, so all the positive energy that we had lasting the last several months is gone. Okay, so from a planetary perspective, it's over. From a time cycle perspective, I thought there was possibly going to be one more month left, and that was going to take us into April. We'll have to see what happens. I don't want to call it too early that, we're not going to get there. Stick to the gun, stick to the idea, and we'll let the markets prove our thesis wrong. We'll take a look at another market, NASDAQ. You can see we're still hovering around this zone. We haven't broken below or above it, so we're still in this zone here. However, we cracked the red 45, we go down. So we cracked the green 45, we go down to the red 315. That's definitely something that's on the card. Okay, so just you'll be watching this one, 315 degrees. Your price point, $24,010 or 24,010 points. And that would put us into a trajectory range of coming down to here or even down to this zone. So right here, we do have a lot of current support. Just wanted you to keep that in mind. That's something definitely to be wary of. For the Bitcoin market, I know that I was watching for a potential change of trend to occur at the start of the week. The market has kind of stabilized. There is chance that any of these sort of reversals are going to probably play out maybe a little bit later or a little bit delayed due to market turbulence. I like to say that everything happens according to time and everything happens on time. But we know that sometimes things don't actually happen on time from a forecasting perspective, meaning that if we are forecasting for a change of trend to occur, say, on the 5th of April, and that was just hypothetical, not an exact forecast, then we would give it a period of time for the actual event to occur from, say, the 20th of March to like the 15th of April. Okay, and that's definitely if we're doing long-term stuff. If we're doing short-term stuff, we might leave it just a 24-hour, 48-hour gap. But we're right in this zone here where any potential sell-off might be seen over the weekend, for example. So keep that in mind. I don't really have anything else to show you on that. Just wanted to give you an update on where we are. We're right at this juncture right now for that Vietnamese market. So we saw last time we saw this, the market had toppled over, especially at this point here. We can see that the market has advanced a little bit higher from the lows. Can't exactly remember where it was. And actually, I'm not getting any more data. Let's change it down to the daily. Yeah, so it came from 10th of March, has reversed around that time period. However, we don't give up just yet. We apply our Fibonacci retracement, especially from this most recent swing here. You see 38.2 has provided, and if we go up to the higher swing, you can see right here that we are sitting under 38.2% still. So it hasn't even breached that 50% level. If I go ahead and do it like this, you can see clearly hasn't breached that 50% level. So 50% is going to bring us right into this zone right here, okay, with these old lows. So there is a chance that we come up and tap below if the market's going to remain bearish. However, we have tapped 38.2 of that swing. Now, if we're going to be real specific, we can really go down and we can really just get this move factored in correctly. So there you go. You can see the whole thing now. But that's it. So that's where we're at. Yeah. So if the downward bias is still in it, well, we're not going to get any change of structure to the upside. So we'll have to keep an eye on that. Once we get the change of structure to the upside, change of structure to the upside, just this higher high, higher low, etc., then we'll change our tune. But we're using Vietnamese market as a barometer. And this is for those of you out there who are looking at oil, okay? This was a dummy forecast that we put out for oil. If it is true, I didn't actually publish this one. I don't believe I published this one. But you can see that the market comes up and then just trades sideways the remainder of the period. So if it does come up, I'm not sure if we're going to break this. But for those of you who are doing anything Gann related at the moment, studying the time by solar degrees especially, I want you to take a look at old highs, okay, old lows, old highs, old lows. And then I want you to tell me why you think that this high or low came in. And I want you to think anniversary, time by solar degrees, all that sort of good stuff. And I think you might realize why this market came up into here, pushed down, and now it's going to stabilize wherever it determines to stabilize itself. As we can see, we are pushing above many, many zones right now. But this is the square of 9 that I'm watching on the oil market, okay? So I've got the major points in blue and red and the sub points in the green. If I open up and show you the settings, I'm using a price unit of 0.4 and I've got all the angles turned on. So if you want to put that on your chart, you can. This is what I'm using for oil at the moment. Okay, so first major resistance would be around 126. Okay, that's if we can break 119. So keep that in mind. However, we know that oil likes to spike and drop, spike and drop, spike and drop. So it just depends on where we are within any given cycle. I won't talk about anything like that today because I don't want to get off topic of what we're looking at. Aussie market, again, we can see that we never really broke this zone here. We pushed above it, broke it to the downside, so it's not strong at all. This is the XKO, and the XKO has done a disgusting job at actually surviving any of this sort of move. So it's really wiped out all the way back to December, even November of last year. So it's really done nothing. So anyone who was long this really just lost everything that they had, especially if they were buying in this period. So again, if we're looking for this market to topple over, I would be looking for a potential top. It doesn't need to be a higher high. It can be a lower high now inside of April. And then we need to see what happens from there on out. My bias is the bullish direction might be over for now. But we can see just how this market has performed over the last 40 years. Okay, and square of 9 for the XJO, where is this one? Square bounce, right? This one right here. It's all over the place. So I always use the 180 degree, 270 degree, and 55 degrees. Usually I just use the 180 and the 55, but I have recently put on the 270 because I did find that it provided some decent support and resistance. And it's currently, it broke the 180, but found support around this zone. Last time it found support at the 55. So we're going to track the 55 to the upside. Actually, we can see right here, it came up and hit the 55 to the upside before reversing. So if this remains a bearish point and this 55-degree angle, and you can see right here, you can see 55 providing resistance both sides. So yes, the market does break things. It does do that. It does shoot over. We apply an orb zone, which just means a bit above, a bit below if you want to normalize the talk there. Market came up 55 degrees, reversed, came up, hit the 55 degrees, and has reversed off of that. So pretty important right here. We've got this 55-degree zone right here providing resistance, and this 55-degree providing resistance. Until we break those two 55-degree angles, the immediate bullish market is over, and we're now in a temporary short-term bearish. And what I mean by short-term bearish, well, there are technical indicators that we use, and we got to switch to the weekly chart if you want to look at those. But basically, we even switch to the monthly chart. And basically, you want to apply the rule of 3 to the downside. Okay. So the rule of 3, remember, 1, 2, 3. If the market doesn't reverse on the third bar, then we're in a technical downtrend. Okay. So if the market pushes down on that fourth bar, then we're in a technical downtrend. That's just the rule of 3. If we apply it on the weekly chart, then we look for 12 weeks. So we have 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks here. And 12 weeks would have been here. Because it moved higher after that and didn't actually break this low in here, then the downward trend was starting to weaken. So we just apply that to where we are now. And unfortunately for most people, this move here, we're only at week 2. So we could see until this high breaks here, we are at risk if we get 12 or more weeks to the downside of the trend reversing. But we'll have to see what happens. We need to track each low. Right now, this is the lowest low, and you track each low lower for that whole time period until we get the 12th week being lowest of the range. At least 12 weeks, okay? So as long as that high isn't broken. What else we got? We've got the gold market. Again, I just want to remind you, no forecasting right now. Just do an update on where we're at, what we're looking at. Just opening up this one. Okay, we're going to get out of this one. We're going to go to the planetary aspects right now. If the market does fall lower, then our next major immediate planetary aspect is going to be around that 20th of March time period. So again, we don't want to be buying into them. So we don't want to be buying into it. If the market does trade lower from here into this 20th of March period, and we do get a nice reversal off it, then we could suggest that potentially a short-term low is in. Okay, I'm not saying that it's going to come all the way down here. I'm just saying we want to be obviously looking for our ranges in price and buying off those. So right now, our most important ranges are the most recent swing range. Let's go ahead and put this one on. Bring it out. Okay. From a strength perspective, we really want to stay above that 50% zone. Okay, so I don't really care. Right now, I don't really care if the market just trades sideways. I would like it to stick above that 50% zone. That would be ideal. And the unfortunate thing would be is if it falls down to that 61.8% zone. And if your eyes are confused right now, let me go ahead and correct it for you. Sorry, wrong one. There we go. If your eyes are confused, so that 61.8% zone, we also have lows back here sitting at that zone, okay? So if the market does come down, ideally sits above this one. If it breaks that, you really want to get that reversal of 61.8. If you're bullish, and obviously this is where you'd want to be looking for entries. Above that zone, you're looking at premium. Below that zone, you're looking at good potentials for buying, but really most market changes occur in this period here. So just keep that in mind, okay? Pressure charts from the, and I'm going to give you a little bit of a secret here, okay? The pressure chart that we're watching was to top out around early March and then decline into possibly mid-March, okay? After that, maybe an advance. We'll see what happens. This is the curve that we've been watching this year already. You can see just how it's tracked. I won't go into too much more detail than that, but we were pretty bullish. After we topped out around the 3rd of Feb, we were looking for sideways prices to occur until around the 4th of March. After the 4th of March, we were looking for a decline into the 14th of March. We can see if we didn't get this major pullback in price, we definitely have replicated that price action already. We give or take what the market gives us and we overlay what we know. Anyway, I'll cut this video off now. That was just a bit of an update for anyone who's been messaging me or wanting to get an update from the last video based on where we are now. Those are my current models of thought. Please just continue to apply your time by solar degrees and your planetary stuff. And yeah, that's really all I have. I'll try to speak to you real soon.